Thank you very much, Asti. A very warm welcome to our visitors. Those of you in the UK, good morning. Those of you in Indonesia or around our region, a very good afternoon to you. It's a pleasure for me to welcome you all to this marketing information webinar. As Asti mentioned, UK residential market update. JLL has been an active member of BritCham in Indonesia for as long as I've had the role, which is 13 years plus. So we're delighted to provide this platform as support for them to be able to furnish some valuable information to our respective stakeholder networks. Just a little bit about JLL first. JLL is a leading real estate services firm that operates in over 80 countries with a global workforce of over 93,000. 5 billion square feet worldwide has been managed in their property and facilities management. Their clients span industries which include banking, energy, healthcare, law, life sciences, manufacturing, and technology. JLL's 13 international teams and more than 100 staff across Asia Pacific have assisted investors in Asia with more than $6 billion in international property sales since 2012. In today's webinar, we're going to explore the UK real estate outlook and the opportunities in the market, and to discuss a couple of specific projects in London developed by JLL partners, Berkeley Homes. It's my pleasure now to hand over the baton to Thomas Wright. Thomas is based in Jakarta, worked for JLL in London, Hong Kong, and now Indonesia in the commercial office leasing team. He's also overseeing the international residential. As mentioned, based in Jakarta, Tom can assist both corporate and personal real estate requirements. With that, I'm going to hand over the baton to Thomas. I'm pretty sure we're going to have a very, very informative session, vibrant Q&A, hopefully, and I'll be back at the end to do a wrap for all of you. Thank you.
Great, thanks very much, Chris. Selamat sore for everyone here in Indonesia. Selamat pagi for those in the UK. As Chris said, I'm based here in Jakarta, overseeing the international residential division, which is very much up and running here in Indonesia. So for any international residential requirements, please do let us know. Our markets are primarily the UK. We also cover other sub-markets such as Germany, Japan, and the US. So for the format of the day will be a market update given by Nick, followed by an update on two projects by Berkeley Homes. So Rob Willis has joined us from Berkeley. Rob is based in Singapore and will give us an overview of two of the projects we're currently marketing. Following that, we'll have a Q&A session. So please do fire over any questions you may have. Widya's here to help assist if there's any in Bahasa. So please do not feel please do feel free to jot down anything you like, and we're more than happy to answer any questions you may have. So without further ado, I think we'll begin the presentation, and I'll hand over to Nick.
Thank you very much, Tom, and hello everyone. It's a great pleasure for me to be able to speak with you all today. So I'm going to give a brief market update covering how the residential market has been performing in the UK and London through this unprecedented period of time that we've been going through. I'm going to then talk about the outlook, what we expect to happen for the market going forward, crucially some forecasts, some indications about when might be a good time to be thinking about investing in the UK and in London in particular. And then finally, I'm going to look at some of the key changes in demand behavior, some of the changes that we've started to see people maybe thinking around the type of homes that they want and need going forward. Now, before I start though, I just want to highlight the slide that you can now see in front of you. Some of the reasons why London has always remained an attractive destination of choice, investment destination of choice, perhaps in many people's eyes, the #1 choice within the world. London, it should be noted, has performed well coming out of all uncertain periods in the past, coming out of the global financial crisis, the UK recession of the early 1990s, the dot-com crash, all major events that have occurred in the past 30 years. And there are a whole number of reasons why London is one of the world's foremost global capitals for so many different aspects. It's the digital capital of Europe, the financial capital of the world, the cultural capital of the UK, the tourism capital of Europe. It's a hub for so many things, and that brings with it opportunities. It's advantaged because of its language and legal system. It's got that strong track record of returns that I've mentioned. And all of those factors mean that it attracts the highest number of high net worth individuals within the world. So London should always be a city to bet on if we're thinking about a real estate investment around the world. So if we move to the next slide, though, I want to talk about how the market has been performing and crucially take you through that journey going forward. So this chart shows you the economic position currently and going forward. There's a zero line running through the middle of the chart, you'll see there, and below the zero line is 2020 position, and above the zero line is the 2021 outlook expectations. Now, this shows you a whole number of major economies around the world and how they've been performing, and obviously we can see that every economy has seen a shrinking over the 2020 period as a result of COVID and what it's the effect it's had on markets. Now, if you look towards the right-hand side of the chart, you'll see the UK numbers pictured, and the span of shows you the span of expectations as to how badly affected the market has been over 2020, reflected in the bar, the beige bar that you can see there. Now, the red bar running through the beige bar is the consensus position, and the expectation is for a 9.9% shrinking of the UK economy in 2020. Now, if we look above the line, we can see the expectation for growth in 2021, and we can see that the consensus position is for growth of around about 6.4%. So it's going to take until around about 2022 to actually get back to the economic growth, or to recover the economic loss that we'll have seen as a result of COVID. Now, all of that uncertainty does bring opportunity, and I'm going to talk about that fairly shortly. But if we go on to the next slide, we can start to talk about what that economic impact has had in terms of residential market performance. And this is a set of high-level headline residential market indicators shown on your slide, covering the period to Q2 2020. And we can see that mortgage approvals, residential transactions, gross mortgage lending, all of them are down quite significantly, anywhere between 25% and a 40% drop in activity in the year to those to that Q2 2020. Now, some of that's not really surprising when we consider that the market was physically shut down for a period of 3 months, and has been in some respects slow to return because of the restrictions on people's behavior to go out and buy a home. Now, there are some positive signs. There's a lot of demand there, pent-up demand, and lots of reports of picking up in activity, and we'd expect actually the next round of mortgage approvals to be above this level already. So things are going in the right direction. But I'd like to draw your attention to the two lines at the bottom, the new home starts figure and the new home completions. Now, completions indicates the homes that are being finished by developers, and it actually is the only indicator there where there's been an increase, and that's because developers have been prioritizing the completion of stock that they already had under development. The interesting line is the new home starts, and I'm going to come on to this shortly in my presentation, but new home starts being down is going to exacerbate an issue that we've had in the UK for several decades now, where we've had an undersupply of housing. We're failing to build the number of homes we need for our growing and changing population. Now, this undersupply, this fundamental undersupply, underpins strong price growth in the long term, and helps to underpin and reinforce the suggestion that the UK is a solid investment choice when it comes to residential investments. Now, if we move to the next slide, against the backdrop of all of that reduced activity, we can actually see, so the grey bars shows you again what's happened to housing transactions. And if we look to the right-hand side of the chart, you'll see that in Q2 2020, it's the lowest quarterly transactions volumes across that entire 10-year period we're looking at. But actually against that backdrop, house prices have actually continued to rise slowly in the UK. So why is that? That's an interesting indicator to see straight away. Well, the main reason for that is that there's been an actual absence of distressed sellers in the UK as a result of the attempts made by the government to protect jobs, to protect businesses. The scheme that was introduced called furlough was intended to mean that people didn't find themselves in a position where perhaps they would have to reevaluate their finances and potentially find themselves in a position where they had to sell a home through a forced position. Normally when you have those situations, as in previous downturns, that leads to falls in values. Now, we do expect some distress to start to occur in the market as a result of the removal of furlough shortly. Furlough ends in October. We also expect that after this initial period of pent-up demand that has been released, there will be once the dust settles, perhaps a greater presence of opportunistic buyers present, which will drive some of the short-term activity. We'll look at that in our specific forecast shortly. If we just move to the next slide, I'd just like to quickly show the position in London. And actually, it's similar to the UK story we've just looked at. So on the left-hand side of this chart, we can see the red bars show transaction volumes and the sharp drop in transactions in London in the early part of 2020, but actually the black line above those red bars on that left-hand side remaining above the 0% line, values continuing to increase as a result of that lack of no presence of forced sellers. And on the right-hand side there, we can see the average house price across London as a whole, across the entire Greater London housing market, a market of around about 10 million people, and the fact that those house prices have remained resilient through this uncertain period up until now. Now, if we move to the next slide, I'd just like to talk about some of the factors that are going to principally be attractive to an overseas investor looking at London. So first of those factors is to consider the currency arbitrage opportunity that is expected to emerge in the coming years. Now, we should acknowledge at the outset that sterling, in the eyes of pretty much all forecasters, is considered to be undervalued, and is considered to be undervalued since Brexit, since June 23rd, when the surprising Brexit vote was arrived at. And as we can see there, sterling was trading at $1.48 on the day of the EU referendum. Since then, it's actually plummeted to somewhere between $1.20 and $1.30, and pretty much gone up and down through that period. Now, currently, as we speak, it's trading at around about $1.34. Now, as I say, most forecasters think that sterling should get back to something like its pre-Brexit position by around about 2022, perhaps early 2023. So something like a 10% currency arbitrage gain to be achieved against the dollar and dollar-pegged currencies for investors looking at the UK over the next 2 years. Now, if we also move to the next slide, I'd like to talk about the tax position as well, because it's a real important consideration for overseas investors. Now, first of all, we currently in the UK have a stamp duty holiday, which is driving some behavior, particularly the opportunistic investor behavior or owner-occupier behavior, because buyers can effectively pay no stamp duty for the first £500,000 of a purchase that they make. They would only start paying for anything above £500,000. So that's driving a lot of behavior currently, and that's going to remain in place until April 2021. And there's a secondary reason for overseas investors to be looking at buying right now from a tax perspective, and that's because the government has indicated that from April 2021, they will introduce, for the first time, an additional surcharge for foreign buyers for UK residential property, an increase of 2%. And you'll see there, it will actually mean that it becomes slightly more expensive for a foreign investor versus a domestic investor to buy a UK home. And the UK, though, will remain competitive, even with that surcharge added, relative to many of the other markets shown on this slide, notably Sydney, Singapore, Hong Kong, and Vancouver. Some of the other markets, it should be noted, while they look more attractive on a tax basis, a transactional tax basis, this is only transactional tax. It doesn't include holding taxes. And the likes of New York, you pay a holding tax for any investment that you make there. So actually over a 5-year period, a 5-year holding period, the tax starts to equalize itself between London and New York. So all things considered, London remains competitive from a taxation perspective for overseas investors. Now, if we turn to my next slide, I'd like to start to look at what we expect to happen to the market going forward, and starting to look about whether this is a good time to buy or not. So first of all, this shows you the historic relationship between transactions and house price change across the UK as a whole. The black line indicates transaction volumes, and the red line shows house price change, and then the dotted lines at the end show you our house price forecasts. So first of all, we can see that in both the UK recession towards the left-hand side of the chart and the global financial crisis around the center of the chart, that there was a significant drop in transactions and a subsequent significant drop in prices. And that was because of, in those instances, a large presence of those distressed sellers I was talking about before. Now, we haven't seen those distressed sellers as yet, but we do expect some to emerge as a result of the removal of furlough, and also a greater presence for a period of time of opportunistic investors, owner-occupiers, who will look to realise some form of discount in purchasing in the UK, but it will be short-lived. And actually, as you'll see from our dotted red line, we expect price growth to return as early as 2021. So what that really tells us is that now, the next 6 months or so, is really the time to be looking to buy. We've already established that there'll be a currency arbitrage opportunity, a taxation driver in terms of realizing that stamp duty benefit of the stamp duty holiday, and potentially avoiding paying the additional stamp duty surcharge, and then all the value gain to come in the coming years. So now it really is a time to be thinking about investing. If we go to the next slide, further reasons to consider why longer term London and the UK as a whole remains a good choice for investing in residential. This shows you the point I was starting to make around undersupply of housing. So across the top line there, we can see the 300,000 homes per year marked, and that's the targeted need for housing in the UK to meet our population growth, our aging population. We have a fundamentally aging population, which means that our population is changing and growing, and we need to build these number of homes to meet that housing demand. Now, fundamentally, as you can see there, we've failed to deliver 300,000 homes over that past 30-year period, and actually the situation is going to get worse now as a result of COVID. We've already seen the reduction in starts, which means that there's going to be a significant drop in new supply coming through. So this will underpin price growth and value change across the UK. It's going to mean that if you find the opportunity to buy a new home, it should be taken while you can, because they're going to be in short supply over the coming years. Again, underpinning now being a good time to look at buying in new residential property in the UK. Now, if we go to the next slide, I'd like to just outline our London forecasts in particular, because we actually expect history to repeat itself somewhat compared to the global financial crisis. And these two charts here show you our forecast for London house prices, Greater London as a whole on the left-hand side, and then prime central London on the right-hand side, the most exclusive residential market in the UK, the market at the heart of London. And what you can see there is we expect a very similar trajectory in terms of housing market performance to what happened in the global financial crisis, particularly in London as a whole. Perhaps values not falling quite to the same level as they did in the global financial crisis, but recovering as quickly and as strongly as they did coming out of the global financial crisis. Maybe in the case of prime central London, even less pronounced falls, quicker recovery, perhaps not quite to the levels that we saw coming out of the global financial crisis, but nonetheless solid price growth quite quickly, again from as early as 2021. And that's because London has this track record of performing well coming out of uncertain periods, and many investors are looking closely at when is the right time to invest in this significant top market choice that already is there. So we expect London to perform well going forward. Now, if we turn to the next slide, I'd just like to round off my presentation by talking about how housing priorities might have changed as a result of this COVID-19 period. So we undertook a survey of, we surveyed in total 2,000 respondents, or we had 2,000 respondents to a survey we undertook, looking at whether living priorities might have changed. This slide shows you effectively some of the collection of the data summarizing our respondents, and it really shows you that we had a pretty representative sample, mixture of ages, mixture of owners and renters, living in all types of different homes, flats, houses, and in cities and in rural areas. So a good representative sample. And there are some crucial headline findings. If we move to the next slide, one of the first findings that of note was that of those 2,000 respondents, there was quite a significant uplift in respondents who now expect to move home as a result of COVID-19. So pre-COVID, 20% of respondents expected to be moving home in the next 2 years. Now 45%, or just under 45%, expect to be moving home in the next 2 years. And that's because people have spent so much more time in their home and realized that there are different things that they want from homes going forward. That we're expected, we've understood in a greater way than we probably ever imagined that we would over this period, what it's like to spend more time in a home, and in turn, what that might mean in terms of what we need from those homes going forward. Now, if we go to the next slide, there's a crucial aspect around that about how we expect to use homes in the future. And this shows how many people worked from home from that sample of 2,000 respondents pre-COVID on the left-hand side. So around about 80% of respondents worked from home less than once a week. But going forward on the right-hand side, over the next 2 years, those same respondents would expect, only 14 would expect to work from home less than once a week. And the vast majority expect to work from home between 1 and 2 days a week, 56% saying that, or 25% saying 3 to 4 days. Although it should be noted, not everybody, only 5% expect to work from home 5 days a week. So we still do see a role for working at home and working in the office, but certainly a much greater balance in terms of using our home. And that will have an impact on the type of homes that we want and should be considered in terms of the homes we invest in as well as investors. And if we turn to the next slide, just rounding off this bit of research, this shows you the factors that our respondents ranked as extremely important now as a result of COVID-19 in terms of the homes that we have. And crucially, just drawing your attention to 3 parts of that, we can see that there were 3 real big shifters in terms of being ranked extremely important now. So firstly, at the far left-hand side of the chart, personal outside space, somewhere to relax in, a balcony, a garden, a communal garden, something that we can go into to relax in, given that we're going to be in our homes more often, or expect to be in our homes more often. That moved in terms of importance, in terms of 26 percentage point shift in being ranked extremely important. And then the other 2, broadband speed, a 27 percentage point shift in being ranked extremely important, and private workspace, a 33 percentage point shift in terms of being ranked extremely important. Perhaps makes sense when we think that we do now expect to work from home much more. Crucially, we'll be working from home, we'll be playing at home much more, and those factors should be considered in terms of homes that provide areas to allow you to do that will have a better demand profile going forward. Okay, so just rounding, if we move to my last slide, just rounding off my section of the presentation before I hand over to Rob Willis. I'd just like to summarize 5 key fundamentals for why now is a good time to buy a London home. We can see that the price growth forecasts, indeed rental growth forecasts we also have at the JLL, show that we expect London to outperform the UK average in the coming years. It's going to be a case of history repeating itself, and London will perform as it did out of the global financial crisis strongly going forward. We know that sterling is undervalued, and so therefore as an overseas investor, a London residential investment from a dollar pegged currency or other currencies will prove to be a shrewd investment in terms of also realizing a currency gain. London has no holding tax, as we know, and is a competitive transaction tax when compared with many other competing territories around the world. So it's another positive reason to consider. And we know that London has this proven track record as a safe haven, attracting investors from all over the world, some choosing London just as a way of, in effect, finding a safe place to put their money, but also looking at London from its track record of outperformance, and even just choosing London to invest in as a place because of its many attractive reasons to live there. It's a great presence of cultural and leisure amenities as well. And finally, now being a good reason to buy because of the stamp duty holiday that's in place until April 2021. So now really is the time to be considering to buy a London home. So thank you very much. I'll take obviously some questions after Rob's given his presentation. Thank you.
Thanks, Nick. Thanks very much for that. That's really interesting. And as Nick said, if there are any questions, please do send them over. The Q&A session will be after Rob has given his presentation. So just to introduce Rob Willis from Berkeley Homes. Rob will be presenting 12 Trees Park and White City Living, two very good projects in central London, two that JLL have been selling very actively within the region. And I'll leave Rob to give an overview of these two projects. But as I said, any questions, please do note them down and we can answer in the Q&A after this. Thank you.
Great, thank you very much, Tom and Nick. Yeah, good afternoon, ladies and gentlemen. My name's Rob from the Berkeley Group. And first and foremost, who is the Berkeley Group? Well, ultimately, we are one of the UK's biggest property developers. We mainly focus on London and the southeast, but we also have some developments in Birmingham. In terms of our developments, we currently have over 70 under construction, ranging from studio apartments up to 5-bedroom houses and penthouses. Also, the price range ranges from around 200,000 to in excess of 60 million pounds. So no matter what you're looking for, if you're looking for an investment in London and the southeast of the UK, then the Berkeley Group and JLL will definitely be able to offer you something. One of the benefits we have of the Berkeley Group is that we ultimately have a very strong financial position. We're a FTSE 100 company, meaning we're one of the largest listed companies in the UK. But with over 70 developments under construction, we have zero gearing, which ultimately means for you as an investor from 10,000 miles away can have a lot of reassurance that we're going to build a development that we say that we're going to build. We've got over 1.1 billion pounds in the bank and over 2.1 billion pounds in forward sales over the next few years. We've never failed to complete on a development, and we certainly won't do moving forward. So you can have that peace of mind in your investment. So in terms of the two developments I'm going to talk about today, we've got one in East London and one in West London. The first of which is 12 Trees Park, which is a brand new regeneration project located in East London. As you can see here from the map, it's located in Zone 2, essentially slightly north from Canary Wharf and a little bit south of Stratford. East London in about the 1980s was identified as an area for regeneration. As London's been growing out and growing bigger, it had to find locations to move into ultimately, as central London was oversupplied and there wasn't enough free land. This East London corridor that we see here was what was identified. So it started back in the 1980s with Canary Wharf, a huge success. And it's obviously the financial capital of the UK and of the world ultimately. Then in 2012, for the London Olympics, Stratford was identified as the place for regeneration. And now it's the area in between where we're focusing. And ultimately, 12 Trees Park is going to be the start of that regeneration, which is going to go on for about the next 15 years. So what are the key reasons that people are buying at 12 Trees Park currently? Well, of course, that location is fantastic. It's Zone 2, so very central. It's also very close to Canary Wharf, the financial capital of the UK, and also to Stratford, which is ultimately a very big retail area and obviously sports hub for the UK as well. West Ham, which is the tube line that is connected to our development is one of the best connected tube lines in London. Ultimately has 5 stations running through it, and I'll get on to that in the next slide. The investment potential is huge. As I've already mentioned, we're building a 15-year scheme here, completely regenerating an old brownfield site that used to be a parcel field site and turning it into a mixed-use development that's going to have an apartments, a new school, commercial space, retail, and new park. Not only that, it's the start of a bigger picture that is going to completely transform this area of East London. As I mentioned at the beginning, the Berkeley brand, we've done this on time and time again, and this is just the newest in a various number of regeneration projects that we have. It's also about placemaking. It's not just about trying to create new apartments or new office space, it's about creating new communities. And over 50% of the land that we own here is going to be actually opened up to new parklands and open space and community hubs, really to make it a destination where 5 lines connect. And finally, the quality of the product that is being delivered. At Berkeley, we're a luxury developer. We use the highest quality of materials, and the specification will be that of what you'd expect in a Zone 1 Central London development. So as I said before, the connectivity from this site is fantastic. Our phase 1 homes will ultimately be 1 minute away from West Ham Station. West Ham Station has 5 lines running through it. So you've got the District Line and Hammersmith and City Line. This will take you straight through to Central London, places like Bank, King's Cross. If you take the District Line, you can go to South Kensington, Sloane Square. So your accessibility across Central London is fantastic. You've also got the National Rail, which will take you out to places like Essex and Kent, as well as into Fenchurch Street in the city. And then running north to south, we have the Jubilee line that will get you into places like Westminster and Bond Street, the heart of West London. And then we also have the DLR, which is essentially the lifeblood of East London, connecting Canary Wharf to Stratford, to Bank, and also to London City Airport. So no matter where you need to get in London, you can ultimately get to pretty much all Zone 1 locations in under half an hour, which means this is a perfect place for people to live. On top of that, of course, that accessibility means that the workforce of London can easily access home and work. But on top of that, it also means you have great accessibility to the universities. 12 of the UK's 100 universities can be accessed to 12 Trees Park in under 30 minutes, whether or not that's London School of Economics, University College London, Imperial, King's, Westminster. All of these universities can be accessed. So if you're looking for the rental side or ownership side, no matter if you're looking to go to the office or if you're looking to go to the universities, it has great accessibility to all of these. So some of the key features of the development itself. Well, ultimately, it sits on a 25-acre site, and 12.5 acres of that is going to be opened up to public realm, really opening up the area and creating that home that we're talking about. There's going to be over 4.5 acres of Wi-Fi enabled park. As Nick was saying earlier, it's key to have great fiber optic Wi-Fi throughout the homes, but also throughout the whole area, which is key moving forward. There's also going to be over 250,000 square feet of retail and commercial space. And what this means is that the development is self-sustainable. You could ultimately work on the development, send your kids to school, do your supermarket shopping, all on the development itself. And essentially, that destination is what is going to completely transform this area of East London. And finally, as I was saying, the community centre, which is now what we're looking to incorporate into a lot of our regeneration schemes. And the point of this is essentially to try and create a place where, residents, commercial tenants can come together and look to expand on the community that has already been created. This map here just shows the sheer amount of open space and green space that we're going to have on the development, which is ultimately always going to make it a place where people want to call home and want to work and live. So in terms of our first launch, we only launched this a number of weeks ago, about 6 weeks ago, was when we had the first launch in the UK. And our first building is called Evergreen Point. It consists of 33 stories and 205 homes. We have a range of studios, Manhattans, 1 beds, 2 beds and 3 bedrooms, as well as penthouses. So it's ultimately something for everyone. It starts at about 465,000, ranging up to around £1 million. So no matter what you're looking for, there's plenty of opportunity here. And we've actually sold over 50% of the building already, just in the past 6 weeks, which shows the sort of demand for the area. In terms of where it is located on the development, here on the right-hand side, it's highlighted in white. And this is going to be about a 1-minute walk away from the tube station at West Ham, which ultimately means the whole of London is on your doorstep. In terms of what we're delivering in residence facilities, this will also be second to none. It's going to have a 24-hour concierge, which will get, again, it's going to be like hotel style, ultimately there for your every need, delivery of parcels and everything like that. We're also going to have a residence business lounge and a co-working space, as well as meeting rooms that you can hire out. So again, if you're working at home, it's a place where people can come to work. There'll also be a screening room, as well as a gym. And finally, there'll also be private areas for the residents only to come and work and sit and utilize. Again, giving that outside space that Nick was talking about that people want. In terms of the interior designs, there is actually 4 different types of choices that you can use. So it's slightly customizable. Here you can see the Juniper specification, but ultimately they're what we call turnkey properties. All the major fixtures and fittings will be included in the apartments, whether or not that's your washer, dryer, your dishwasher, your sink, your cupboards, as well as the bathrooms. All you'll need to put in is a soft furnishing, such as your bed and your dining table. So that was a sort of overview of 12 Trees Park, located in East London. Now we're going to talk about White City Living, which is located in West London. So where is White City Living located? Well, ultimately, when you look at London, super prime London, you have the areas of Mayfair, Belgravia, Knightsbridge, Kensington, Holland Park, and Notting Hill. These are very established areas in West London, and there is not a huge amount of regeneration or space to regenerate in these locations, as they are very established. Now, ultimately, in the past, you had a place called White City, which was the industrial side of West London. And ultimately, the whole of the stretch that has been regenerated used to be warehouses to supply central London with what they needed. But as London's grown, as the prices have increased, we've realized that this is a fantastic place for regeneration. Ultimately, back in 2008, it was Westfield that came into the area and completely started this regeneration. And I'll get onto it in the next slide to show where that whole area is being regenerated. But what this means is you're very, very close to central London, very close to the areas of Kensington, Knightsbridge, Notting Hill, yet the price point hasn't yet caught up to those locations. If you were to buy a new build property in Knightsbridge or Kensington, for example, you could be paying up to £7,000 per square foot. And on average, you'll be looking at around £3,000 to £4,000 per square foot. Same in Notting Hill, which sits adjacent to our development, you'll be looking in excess of £2,000 per square foot. But White City is yet to get to those levels, which means it offers fantastic investment opportunity, which is currently being sold at around £1,400 per square foot. So in terms of the regeneration of the area, ultimately there's been £8 billion invested in the White City regeneration, which is going to deliver over 5,000 new homes, 20,000 new jobs, and over 2 million square feet of office and commercial space. This all started, as I mentioned earlier, in 2008 with the completion of Westfield London. Last year, they also completed on a £1 billion extension. This makes it the biggest shopping mall in Europe and sits adjacent to our site and then ultimately can be walked to in 1 minute. In there, there's a huge array of different shops, which I'll get onto later in the presentation. You also then have the BBC television studios. Obviously, the BBC, one of the biggest corporations in the UK, occupied this site for many years and moved to Manchester recently. However, the BBC Worldwide is still kept there, and the BBC Television Centre itself has been converted into apartments and commercial space, as well as a new hotel, which is again all completed already and completely helping transform the area. Then to the north of our site, we have the Imperial College £3 billion new campus. The first phase of this started completing last year and now is fully completed, and they're now starting to work on phase 2. And then next door to Imperial College, you have White City Place, which is the commercial hub of White City. This is home to 5,000 workers on a daily basis, and you've got the likes of ITV located in there. And ultimately, combining all of these areas together is what is White City Living, our development sitting in, highlighted in yellow there. And essentially what it means is this whole area has been completely transformed. And this is ultimately the last bit of the jigsaw to be built. And once completed, all of this will be complete and good to go. So what we have is a development consisting of over 2,000 new homes. We've had phase 1 and phase 2 have been extremely popular and fully sold out. And we're now releasing the Cassini Tower, which you can see here on the right-hand side, which will be a 33-story tower consisting of various different apartments of 1 beds, 2 beds, 3 beds, and penthouses. In terms of Cassini, we've got 1 bedroom starting from £860,000, 2 bedrooms from £1.265,000, and 3 bedrooms from £2.735,000. Again, with fantastic views over the park and also the water. In terms of the development itself, it will comprise of 2,372 apartments in total over 5 phases. And we're currently moving on to phase 3. It's going to be a 10-year build program, of which we're about 5 years through. And we've already had completion of phase 1, which is very exciting. One of the great things about the development, of course, is that regeneration of the whole area that I was telling you about, but it also has excellent transport links. We sit on 2 London Underground lines, White City and Wood Lane. White City is on the central line, so it'll take you directly through central London, whether or not that's Bond Street or Oxford Street, take you onto Bank, and just 12 minutes and 25 minutes respectively. You can also take the Hammersmith and City line round to places like Paddington, King's Cross, and also directly into the city. So although you have everything that you need on your doorstep, in and around the immediate area, accessibility to the city is still fantastic, and the rest of London is very easy as well. Not only that, we'll also have world-class facilities on the development. There'll be a swimming pool, a spa, sauna, steam room, 24-hour concierge, supermarkets, shops throughout the development as well as 2 cinema rooms and a gym, of course. And there'll also be over 8 acres of park and garden on the development. And considering our site only consists of 12.5 acres, that's a huge percentage of the development dedicated to outside space and public realm. So in terms of what we've already delivered today, we've achieved over 500 sales, and we've had our first 80 completions, as well as completions of the linear part. All of phase 1 and phase 2 are now sold, and completions are happening as we speak, and the new landscaping is all coming in. As you can see here from this picture, the proximity of our development, sort of on the left-hand side, that white building in Westfield, London, is literally a 1-minute walk. So what is new in White City and in Westfields itself? What is actually there? Well, as I said, it's the biggest shopping mall in Europe. There you've got the new John Lewis, one of the biggest and most sort of well-known brands in Europe, on your doorstep. Harrods have just opened their 2nd store in London at Westfield as well. But ultimately, you've got everything there. You've got ice skating, you've got cinemas, you've got hundreds of different restaurants, as well as the luxury shopping village, as well as your Primark. So no matter what you want, it's on your doorstep and only a minute's walk away. At White City Place, you've got the likes of Net-a-Porter, Mr. Porter, ITV, and also the Royal College of Arts. And this also comes down to the point of whether or not it's Imperial College, Royal College of Art, businesses, they're all located in the immediate area, which means there's always going to be need and want for homes in this area itself. And finally, the Imperial College, the £3 billion new campus that I spoke about, is completely transforming this area. And the idea is to push Imperial College from already a top 10 global university up to a sort of top 3. And that's their sort of grand plan, hence why they're spending so much. And again, transforming this part of West London. And finally, we always move with the times, and here at White City, they've taken the COVID-19 pandemic and tried to incorporate it into the way people live and the way that we build properties. And moving forward, we're going to have touch-free access at the development, so you can access your homes without having to touch the doors, ultimately you know, having the security and safety of all our purchases at our heart. And finally, just a little bit on, you know, we've seen it before, you know, at Berkeley Group, we focus on large scale, complicated regeneration schemes. These aren't our first time we've been doing it. We've been doing it for many years. And what we've consistently seen is increase in values of the developments that we've regenerated. For Royal Arsenal, for example, back in 2011, you know, we were around £400 a square foot. Now we're over £800 per square foot. That's more than 100% increase since 2011, which we haven't seen in London as a greater market. Same in Woodbury Down, where we've gone from £500 a square foot up to nearly £1,000 per square foot. And at Kidbrooke Village, we've gone from £350 per square foot to in excess of £600 per square foot. And what this means is when you completely transform an area, a brownfield site, and you bring in new schools, new restaurants, new commercial premises and new homes, this really does add value to the area. And that's what we try and do as a developer. Thank you very much for listening.
Thanks, Rob. Really interesting. So as just to echo what Rob said there, Berkeley Homes are certainly one of the biggest home builders in London, one of JLL's biggest clients. They do have a lot of projects available within the capital, and also some, you know, just outside in the southeast, and also just outside of London. So if you do have any other requirements or any specific locations in London that is of interest, I'm sure that we cover that. So please do get in touch with us and let us know, and Rob and I and Widya can certainly help. But moving on, I know we're a bit conscious on time and we want to get to the Q&A. I'm just going to touch briefly on the buying process, and the buying process through JLL. As we've mentioned, JLL very much is a turnkey service, and from an international purchaser, it's very much handled by us. So as we can help you identify the opportunity and help you agree the sales, in terms of the reservation fees and legals, that can all be arranged through us. So it's very much a turnkey service run from Indonesia and managed locally. I'm based here in Jakarta, Widya's in Singapore, Rob's in Singapore. So in terms of the management with time difference and there's no need to travel or anything like that. So we manage it very much on the ground here. Straightforward legality, all of the contracts are sort of pack contracts with recommended law firms that are approved by developer. Obviously, Berkeley Homes being a PLC home builder, one of the largest home builders in the UK. Everything is checked, approved, and all the legality behind that is certified. So there is no worry in terms of the credibility of what we sell, and everything obviously coming through JLL is highly regarded. So but the process is very simple, and we wanted to give you a quick timeline here of what happens, and I can run through this in detail if anyone is interested. But for the UK generally as a market, it's a reservation form, signed reservation fee, usually around £2,000 to £5,000 depending on the project. A deposit structure where you'd pay 10% on exchange usually, with a tiered deposit scheme, usually sort of 20–30% up to completion. So that's up to the handover of the apartment, which will be managed by us and developer, where you would then complete on the apartment and pay the remainder of the balance. There is financing available, which we can discuss. We have a broker in the UK that can deal with international financing, so that can certainly be a conversation if of interest. And post-completion for rentals and for leasing, JLL can handle as well. So we have estate agencies on the ground in London that will look after your asset. No need to travel to the UK. It could be fully managed from London. So as I said, turnkey service, very simple. The international residential side for JLL has been operating for sort of over 20 years in Asia Pacific. We're very well versed with dealing and looking after our international investors. So a very simple process. But I think we can move over to the Q&A. I know we had a few questions, so thank you for those who have already submitted a few questions prior to the seminar. I'm going to hand over to Widya, head of JLL Southeast Asia for international residential, very well versed in I'm sure a lot of the questions coming in, but she's going to direct those out to either Nick, Rob, or myself. So
thank you, Tom, for that introduction, and hello to everybody. Selamat sore. This is the longest I have been away from my native Indonesia in recent years, so I've missed Indonesia and all of you very much. And I hope that soon enough the borders will open and we can meet in person again. So thank you again for some of the questions that have gone in. There is still, I think we can still take a couple of questions. So if you have them, please submit on the Q&A box today. Right, so the first question that we have, what is the best way to purchase the property by company or individual? What is the sales transaction in terms of tax? In the current condition of the market, property market in comparison to the last 5 years. Perhaps I can direct this question to Nick. There's two parts here, buying under company name or individual.
Yeah, thanks, Widya. Yeah, I'm happy to pick this one up. So I think that the short answer is that there's no one size fits all situation here. Everybody's situation will be different. There'll be circumstances that mean that it might be better to buy as an individual. Other circumstances might dictate that using a company is better. And I guess what that underpins is the importance of finding yourself some good advice. Find a good advisor. Speak to us at JLL. We'll put you in contact with the right people to help you structure the best solution. I think in terms of the second part of that, it kind of alluded to some of the elements I covered in my presentation around taxation and when is the right time to buy in the next 5 years. And obviously, as I've outlined, now is a good time to be thinking about it because of the advantages that you can gain in terms of the stamp duty holiday that exists and potentially, where possible, if completion is achievable between now and April 2021, not having to pay an additional surplus if indeed that is actually introduced by the UK Treasury, as has been indicated that it would be. So I think that covers both parts of that question.
Mm-hmm. Right. So the second question, which I think is very interesting, are you seeing a trend of people relocating to the country and leaving the cities? And if so, which parts of the UK are we seeing an influx of people, as presumably this will result in an increase of the cost of countryside properties and lowering of property prices in London and elsewhere? Perhaps Nick, as a head of research for living, you could take on that question as well.
Yeah, no problem, Widya. So as our research suggested in the presentation, actually there is a changing nature to demand at the moment. Now, it should be noted that we did that survey work in what you might call the eye of the storm. We were asking those questions to people in the middle of lockdown, and we're going to do that survey again soon. But some of the early demand indicators are that people are prepared to potentially move further afield from the centre of cities, to probably in the acknowledgement that they might work from home a little bit more. So this is likely to serve commuter belt areas quite well in terms of an influx in new demand. But we do expect that to soften somewhat once people really start truly returning to the office. And also within our research, we found that there was a quite significant age discrepancy towards what people might want. And actually, under the age of 40, the majority of respondents expect to be working much more still in the cities. So we do expect demand to remain strong for cities. And crucially, cities will remain those employment hubs that have been present for so many years already, and we expect them to continue to remain present. So perhaps as COVID starts to subside in our memory, demand will strengthen once again for cities. So we don't expect some kind of fundamental change to overall values. The heart of the city will remain the highest value, with pockets of value growth in the outer areas, in commuter belts that prove to be more attractive. But no real crucial overall change to the demand profile going forward.
Thank you, Nick. An interesting question on tax has just come in. Recent changes, I believe, mean that non-residents are now subject to capital gains tax. What is the current rate, and on the back of COVID, do you expect an increase of the capital gains tax? Perhaps Nick, if you don't mind taking on this question.
So my understanding of this question, I could be proven wrong, is that actually this has been the case now for a little while, actually, that non-residents are subject to capital gains tax, just as domestic investors already were. So actually that was to a certain extent a leveling up of a taxation situation that was disadvantaging a domestic person at the advantage of an overseas investor. So to a certain extent that was leveling the playing field fairly for both a domestic and an overseas investor. The current rate is something in the order of 20% capital gains tax to be paid. Is it? Rob's probably just correcting me. 18 to 28, depending on if you're a higher rate or lower rate taxpayer. Right. Yeah, 18 to 28. But that isn't a new change as we speak.
Mm-hmm. So again, if you would like to know more about tax, we are more than happy to also refer you to our panel of tax advisors and for you to discuss on that matter. Thank you, Nick, for your response. Let's give you a break. We have some questions on the development itself. Perhaps now our attention is towards Rob. White City Living, what impact will the university or retail have on the property values? Have they already increased since phase one?
Yeah, I mean, again, we have seen some increases in terms of between phase one and now. And again, we'll expect to continue to see increases in prices as we move forward. Ultimately, when we got the land and when we started building there, it was a warehouse. And now we've got, over 500 properties sold on the development, over 100 that have been completed on, including the opening of the public realm and the opening of the supermarket, as well as various different retail outlets there. So it's already completely changed the area, and you can go down there and witness this. But of course, we've still got a huge amount more to come on the development. We've got another 2 new phases to be built. We've still got the residence facilities to come online. We've still got a number of different retail tenants to come online as well, such as property agencies and commercial premises. So, as we continue to regenerate the area, the prices will continue to go up. I think, importantly, as I said, we're currently around £1,450 per square foot at asking price on the development. But if you compare that to the neighbouring Holland Park villas, which are at £4,000 a square foot, or anything in Notting Hill itself, which is going to be at 2,000 plus per square foot, it still offers relative value, and prices we would expect to continue to increase.
Thank you. Indeed, I've seen videos of my brother-in-law just moving to White City Living, and I've seen videos of everything else. So I'm excited to come and visit when we are allowed. 12 Trees is now we are in first phase. There's a question. Stratford is already quite developed. Will this follow suit in West Ham in terms of regeneration? What else can we expect?
Yeah, absolutely. As I was mentioning, Stratford was, the sort of the baby of London 2012, essentially, and regenerating that area. Obviously, Canary Wharf to the south with the sort of the 80s and early 90s, and now sort of the residential coming there. But in terms of that mid area, there's a huge amount that has been earmarked for regeneration. Whether or not that's areas around Aberfeldy, Poplar. We ourselves at the Berkeley Group have 3 other subsequent sites in and around the area. One being the adjacent site to 12 Trees Park. And all of it is going to be completely transformed, both in terms of obviously residential homes, but also commercial and retail. So yeah, the whole area has been earmarked, and over the next sort of 15 to 20, 25 years, is going to be completely transformed. And one of the benefits, obviously, of this part of London is that sort of, the great infrastructure is already there. Unlike areas like South London, which have also been earmarked for regeneration, they don't have the same level of infrastructure as already is in East London. The DLR is there, Crossrail is opening next year, the District Line is there, Jubilee Line is there. So, that means, as we build, people can get to where they need to be. Unlike South London, which are going to be waiting for maybe Crossrail 2, which, could be another 15 years away, really, in reality. So, in answer to your question, it's definitely going to completely change, and there's a lot more change to happen in the area.
Mm-hmm. Thank you for that. I think we are conscious of time. I would take one last question. What is the estimated rental yields in the two developments that you have presented, Rob?
The estimated rental yields, again, depending on unit size, range from around 4% at 12 Trees Park, about 3.6 to 4% at 12 Trees Park. And at White City, it'll be slightly lower as it's a slightly more prime area, but you'll be looking at about 3.3 to about 3.6 gross yield. I mean, ultimately, that's at today's figures. 12 Trees Park doesn't complete until 2024. There's a lot of predicted increases in rental demand and rental prices over that period. So what will be there upon completion, we're still yet to see. So that's at today's current values, again, which is relatively good for central London.
Thank you. And for those of you who are curious, not to worry. If you buy through us in Asia, we will be assisting you with the lettings and management as well back in the UK. We actually have a couple of questions that are mainly focused on market, COVID, post-COVID, which I think Nick has covered very well in the presentation. However, because we are conscious of time, not to worry, either myself or Tom will be contacting each and every one of you directly for a follow-up virtual meeting and discussion. So with that, perhaps I can pass back to Tom.
Great, thanks Widya, and thanks Rob and Nick for answering those questions. And thank you all for joining this presentation. I hope you found it informative. I think, as we said, we have many options available in London. I am here in Jakarta in Indonesia, so if anyone would like to meet and discuss or have a call, we're certainly happy to chat. And Rob being in Singapore, Widya in Singapore, we're very easy to communicate together. So I'd like to thank again all of the speakers. I know we're a bit conscious of time, so we have to move on, but we will be sharing the presentation with you all, the recording post the event. And as you said, please do get in touch. We have a lot to offer in the UK and in London, and Berkeley Homes specifically is one of our key clients. Have a great track record in delivering great investments and great quality. And I think one key message to echo from this is the rental yields, yes, will be strong, but I think buying quality new housing in London now is the most important attribute. The work from home ethic and the idea around good quality housing for young renters is certainly very important. So now and ever more, I think it's certainly worth looking at good quality developers and ones who have a great track record, and that certainly is Berkeley Homes. So to finish up, thank you all very much. We'll send you an email to follow up with this. Any questions, let us know. I'm going to hand back now to Chris just to give some closing remarks. But again, thank you to our speakers. Thank you all for joining.
Thank you, Tom. I think you very comprehensively brought it all together. Personally, I think it's absolutely fantastic to learn of so many compelling reasons why the UK remains a very, very good investment opportunity when it comes to property. I was particularly interested in the slide and the statistic about the 10 or the 12 universities that are in London. And we do know as a Chamber of Commerce for 5 years running now, the numbers of Indonesian students that are going to the UK has been rising consistently and not insignificantly as well. And whilst there is interest outside London, obviously some of those very, very big names are the real pulls for them. And when you talk about younger renters, they're perhaps the market, or indeed their parents are, in securing a safe place for them to reside while they're studying. With that, I would really just like to thank all of you being JLL and your partner Berkeley in London. So that's Thomas, Nick, Widya, Rob, for providing us with the opportunity of supporting you with this marketing information webinar, this type of service, this type of facility for disseminating information that's going to be of use and great advantage to our wider stakeholder network is a BritCham service that we're proud of and pleased to make available to other businesses as well. To everybody that's on this call, whether you're in the UK, it's still good morning. Yes, here in Asia, it's good afternoon, and we wish you a very, very pleasant rest of the week. Please do keep in touch with what BritCham has to offer through our various media as well. Good luck, JLL. Good luck, Barclays, with these two projects that you've brought to us today.